Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video. This morning, we're going to be looking at the Great British Pound USD. But before we get started to break down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice. But we all know why you guys are here. You guys want to find good, credible Forex content that can help improve your ability as a trader and to help put a little bit of extra money in your pocket, especially during these troubling times. Okay. So with that being said, let's go ahead and break down this Forex pair. Okay. All right. So before we get to talking about what's been happening on the chart, let us talk about what is going on with each currency respectively. Okay. So overnight, we did have some good news come out about the Great British Pound concerning its PMI. A lot of the PMIs came out a lot higher, except for the manufacturing PMI, which is not too surprising because manufacturing does tend to slow down during times of inflation. Because you got more people trying to do a lot with a little bit, so that means a lot of goods are not coming out to factories um, as in large volume or expeditiously as companies would like. So we did get a lower number with that one, but the other PMIs for composite and service are actually very good. So we're going to have to see how this plays out during the remainder of this New York session, going into the Asian session and the London session. But we still have a couple things going on with the British pound. They did increase its interest rate from 50% to 75% to combat inflation. That's respectively casting a dark cloud over the UK. Its major trading partners in the EU are having a lot of issues with their economies due to inflation, and both the EU and the UK are both having problems from a reverse negative effect of trying to put sanctions on Russia because the countries that make up the EU and the UK tried to put sanctions on Russia, economic sanctions on Russia, which seemed to have turned around and backfired and started to hurt the entire European economy as a whole, and also with the British economy as well. Even though UK is not part of the EU due to Brexit, being that the EU is one of its closest trading partners, a bad European economy is also bad for the UK's economy as well. Okay. And then on top of that, we have a lot of fear, uncertainty, and doubt surrounding what is going on with the entire European economy and the UK economy, just off the simple fact due to the destabilization caused by the Russian-Ukrainian war. But now we are starting to get some positive outlooks on that because they are coming back to the table to have peace talks. And this is like their third or fourth time doing the peace talks. So it can go either way. They may sit down and actually discuss peace, or they may get up and leave again and just get to fighting like cats and dogs. So we're going to have to see how these things play out. Okay. Now with the USD, as we stated in previous videos, that we're dealing in a situation where the Feds have increased its interest rate from 25% to 50%. And also, we're going to have to see how these other further economic policies in place that they're doing to combat inflation is going to actually affect inflation. If these policies and economic measures and increase in interest rate combats the inflation effectively, fast, and expeditiously, then we will see a rapid gain in strength for the U.S. dollar. If we see a reverse effect of that, which is that the increase in interest rate and economic policies and measures put in place by the Feds are not combating inflation aggressively or in a timely fashion, then we will start to see FUD, fear, uncertainty, and doubt start to surround the U.S. dollar and will become much weaker than it is now, and then we'll start to see the beginning signs of a recession. Okay, so with that said, now with each currency broken down, let's talk about what's physically going on the charts. Okay, so as you can see, since the beginning of the Ukrainian invasion, we did start to go down. We did start to go down because we had a lot of uncertainty surrounding the major three European currencies, which is the British pound, the Swiss franc, and the euro. Okay, then we did have to start to have some retracement back up. And like I said in previous videos, we could get as high as this area here and we start to reverse like we did. And now we're starting to look like we're going back towards the fundamental downside, okay? Because the only thing that is really going to make this a true price reversal is if, we start having very positive news coming about the talks or an actually treaty or is getting put in place or NATO nations are acting as intermediaries, but being that Russia does not like NATO, I don't see that happening. This is something that's going to totally get solved between the Ukrainians and the Russians. Okay. So if we start to get very positive news about the peace talks and we start to see the economic policies and measures in place start to do well for the British economy, then we could possibly start to see a price turnover, but not too likely, especially with how gun-ho the federal government is about with tackling the interest rate, tackling the high inflation and getting prices down for consumers. Now, unfortunately, the only reason why the government is doing that because they come to realize that the time frame in which they handling it, they have a very narrow window. Because if we start to go into the midterm elections for congressmen and senators, or starting to go into towards 2023 with a very poor economy, it's going to be a very, very, very bad or wild political battle. So this is mostly for political agenda than it is for helping the American citizens because you can't start these processes in the next few months. You got to start this stuff now because economic policies and procedures take time to institute and to see its effect. But for the most part, like I said, we had went up to here, like I said we would do in previous videos, and now we're starting to go towards the downside. So we could get as low as here before we start to range out, have a pathetic push up and go down, or we can get as low as this area here before we start to have a range and a pathetic push up and to go down. Now, there's a possibility a price can turn over, but yes, it's too many fundamental factors that take time before it can. So we may get as low as this area here before we start to see some price turn over towards the long position. But for right now, this is still looking like a short position. I feel sorry for all the poor souls that brought up here because now a lot of stop losses of blown accounts just have happened. Okay, so we're going to look like we're going to continue down to this area here before we start to get a little shaky, have a pathetic push up and go down. Then once we get down to this general area here, we got to recheck our fundamentals to make sure and see what exactly is going on between Russia and Ukraine, the UK's inflation and its economic policies, and also keep a close eye on its closest trading partner, which is the European Union, to see how all these things are going to play out for the long term. Okay. Hope that information was helpful for you guys. Happy trading.